Welcome back to the Nomad Hedge, everybody. In today's market rundown, we will be taking a look at the S&P 500 and the markets in general. We will be looking at the price action for Bitcoin and etc. If you haven't already, consider liking and subscribing, and let's get into the video. So let's start off by taking a look at the SPY. And as we can see here, this bull market is intact. We do what we believe is still this subwave after subwave, and that means that we're going to get an extension here of wave 5, because we still believe that we're part of this wave 5 here, and that will be the last wave that's going to conclude. So the uptrend is pretty strong here, and we can also take a look at how the Qs are faring out. We're seeing that type of same market structure here, where you have a 1-2, or actually a 1-2, 1-2, and then potentially a 1-2, 3, 4, 5. So this could go on for a very long time, maybe 1 or 2 weeks, before we really see the strong conclusion here of wave 5. And if we take a look at the Russell 2000, things are looking somewhat different here. And the reason why, it's because of this wedgie type of triangle that's setting up right here. And this uptrend here from wave 4 all the way till wave 5, it looks like an ending diagonal, and so the market could get rejected at this level. And if we zoom out here to a weekly chart, it would actually be an area where we could see some breather here in the markets, where you have the prior cycle wave 1 here, then you have the primary, and then basically this has been rejected previously. And so I wouldn't be surprised if we saw rejection here and then find buyers once this correction has concluded, and then we can make another attempt here to break towards new all-time highs. Now, I do believe eventually this resistance will we will break above this one. Now, what's interesting to me is that this structure here, either we're looking at wave 5 concluding right here, okay, or we could be looking at wave 5 concluded right here, and we started a new wave 1-2. Okay, so that's also a possibility. So we're basically looking at something along the line of this 1-2, and this recent uptrend here is just part of a maybe minute degree or even sub-minute degree, maybe pulling back here, retesting the highs, and then making another attempt to break towards new all-time highs. So that's also a possibility. Now, if we take a look at SPY, we can see that the SPY here on a weekly, let's zoom in here, is also looking somewhat similar to the Russell 2000, but the correction here is very, very shallow, right? So the SPY made new all-time highs already. And so we're basically, I mean, if this were to be a new wave 1-2, we're looking for basically wave 3 here to conclude. If we would just take the extension of the, at around 8,700, right, or 875. So that is why I don't really believe that is the case. I do think that this is still part of the same cycle here, which is the minute degree. And once this minute degree has concluded, we will start to correct, and that will set the stage for a minor degree of wave 1-2. So that's basically how we're looking at the Russell 2000 and the SPY here on a weekly chart. But again, if the Russell 2000 were to get rejected here, we could still see the SPY and the Qs moving higher while the Russell 2000 takes a breather. So that's just something to think about. We're watching this prior resistance line here, and we're going to see basically if this wedge here is going to play out that way, that we're going to start correcting, and we're not going to be bearish at all. We just think that this is, this is a correction to buy, in our opinion, setting the stage for new highs again. So that was it with the major indices. We're going to move on and take a look at Bitcoin here on a daily chart. And if we zoom in again, there are a few things to take into consideration here. Now, this uptrend here, we would want to see this POC line actually set the ground here. It could be lagging sometimes because we did start from a low level, and so it could take time for the POC to actually change. But either case, when we zoom in here, we can see that this impulse here could actually end right there. And that's actually the 0.618 from the highs here. And we also have the POC line. So if we're actually getting rejected here and starting to break below these moving averages, we could see further decline in the crypto market. So keep an eye on this POC line. I highly suggest that you anchor this one from the lows here and then just take it from the highs, and that will give you this POC line with the value area highs and the value area lows. So we could see this thing getting rejected, or if we're getting a bounce here, we obviously want to see a retest of this POC line, and that's going to set the stage for another wave 1 and 2. Okay, so that's how we view Bitcoin. Now, if we take a look at Bitcoin here on a monthly chart, so this is a pretty interesting chart here, and basically what we have is a very long trend line that started back in 2017. So we need to break above this trend line here. Now, I do eventually believe that we're going to do so. However, there are two scenarios what's going to happen here. Either we're going to get rejected here and get a 30 to 40% correction, find some buyers, and then make another attempt to break it. Or we're going to start breaking out immediately. Okay, and that is why if we switch back to the daily, this is part of, you know, a new wave cycle here, basically 1-2. That's going to be the minor cycle, and any break above this POC line here, we would correct this sub-minute degree, and then that's going to set the stage for another subwave here. And we're going to need these bases basically to trigger that event or buying thrust to get above that long-term trend line that we saw on the monthly chart. If we're going to start a strong correction, we're going to see prices getting rejected from this level here, and that is where we could see Bitcoin and the overall crypto markets starting to lose some ground. Now, if we take a look at Ethereum, the interesting thing about Ethereum is that Ethereum hasn't made new all-time highs yet, and if we take a look at this structure here, it looks impulsive. This move here could have just been corrective, so we need to break above this high here, because if this is in fact a corrective move, we could be looking at something along the line of this, where you have basically an impulse, and that would finalize that correction of wave 5 of a minute degree. So that's just something we're watching here, and Ethereum is lagging Bitcoin a little bit, and so we're starting to see some negative divergences in the indicators. But I think the most important thing to watch here is obviously the Tether dominance versus the entire crypto market cap. It's obviously excluding all the stable coins, but either case, when we look at this impulse here, this is a leading diagonal. This correction here, basically, I mean, it looks impulsive to me. It could obviously be corrective. If this impulse here starting to find some support here again, we could start to see Tether dominance moving up here. And so Tether dominance is moving inversely with the entire crypto market. So when Tether dominance rises, that's when the crypto markets takes a breather. Okay, now the reason why this is important is that if we would zoom out here to a monthly chart, you can see here, I mean, ever since November 2023, that's when the crypto bull market started, right? I mean, Bitcoin bottomed in 2023, and what you saw basically was that Bitcoin rose and Tether dominance fell. During the bear market in 2021, you saw Tether rising and the crypto markets were falling apart. So this was basically when FTX broke down, and that was basically the bottom of the market. So we're at this threshold now, this very important level of support here, and we could see a type of scenario where Tether starts to rise again, and that could set the stage for a new bear market to happen. That is why we talked about that correction, that rejection from that BTC trend line we saw on a monthly chart. So if we get back to that thing again, so if Tether were to actually gain momentum, we could see a 30 to 40% correction. And that would, you know, start to signal a new bear market for the crypto markets. If this in fact is wrong, if we're wrong here, obviously we can't hit below 0 here, because that would basically end Tether as we know it. So either this one is going to continue a little bit further down, or we're basically going to find support here, and that's going to set the stage for a massive move here for Tether. So this is something very critically to watch. Obviously we're going to keep you guys updated. So that was it with Bitcoin and the crypto markets in general, and let's move on and take a look at the 10-year treasury yield, because the Fed cut rates here yesterday. We got a 25 basis point cut. They're signaling 2 more cuts this year and even another cut in 2026. What's interesting though is that the 10-year is starting to gain some momentum here. Okay, so if we zoom out here to a weekly chart, we can see that this trend line here is still being held. Typically, I mean, the more often you test a trend line, the weaker it gets. Now, if this one would just be a shakeout here towards the downside and start rising, that could be very, very bad for the market. So keep an eye on this. Obviously, when we take a look at the structure here, I mean, it looks impulsive to me, right? You have a 1, 2, and they have 1, 2, 3, 4, 5, and then you can see another test here of the trend line and then further decline here. Now, eventually, we do believe that the 10-year will fall down to this anchored weave up of the volume profile. We also have the value area lows aligning with the 100% extension. After that, we'll just have to see what's going to happen with yields in general. So keep an eye on the 10-year treasury yields here. This is the futures market. We don't want a strong rejection here, because if that happens, it's going to be very, I mean, it could be very ugly here for the markets. We're watching the 10-year. We're also going to take a quick look at the US dollar or the DXY. We're also seeing that the buyers are starting to show up here again. We got a shakeout here, basically breaking the lows of this prior low here back in June 30th. So this trend line is being held for now. You see that the DXY is trying to eagerly break below this trend line here, but so far it's holding up pretty well. I mean, we do believe eventually this trend line will break. When we look at the structure here, it's basically 5 ways up. This is a cycle that started back in 2011. We're actually 2008 after the great financial crisis, and so we're basically going to correct this entire move here. Okay, so we do have an A wave here, we have a B wave here, and then C should end at around 94. But we do believe that this correction will be much larger than that. We do eventually believe that we're going to find support here at the 0.618, and that is when the DXY will start rising again. You know, I mean, I could be wrong, obviously. It could happen that we're finding support here again. The dollar is catching a bid right at this trend line. So, but as I mentioned previously, I mean, after the third attempt, you typically break down, and once you break down, it gets really ugly. So the dollar should fall here, and that should obviously be supportive for the markets in general. But eventually, what's driving the market higher is liquidity. So even if the Fed raises rates and injects liquidity into the markets, that's still going to be bullish. Okay, so in my opinion, I mean, interest rates aren't that really important. It's always about liquidity. So that was it for today's video. Quick highlight here of the market. We'll keep you guys updated. Obviously, you can follow me on X. My handle is @Nomad Hedge, and I'll see you guys in the next video. Take care for now.